Siddharth?
Yeah, yes, Mr. Vishwanath, I can hear you.
Can you see the screen?
Yeah, it's visible. You can just keep it at this. We'll just wait for people to join. We still have another 10 minutes, so we'll wait until. So we will start off in another 5 minutes. We're still waiting for a few more people to join, so they might take a while. So another 5 minutes, we will start off. Once again, thank you all for joining us. So I hope I was audible. You can give me a yes on the chat box. All right, so I think we can start off. First of all, good afternoon, everyone. I hope I'm audible. I'd like to thank everyone for joining us for today's webinar organized by Web. We're looking forward to a wonderful session. Also, I'd like to thank our knowledge partner, Lakshmikumaran Sridharan, for joining us today. I am Siddharth, and I handle the product marketing side for the company. I'd like to give a small briefing about the company before we dive into today's topics. Mr. Vishwanath, you can change the slide. So here's a small introduction about the company. Web is a 20-year-old company as of today. Web was initially known as Wipro e-Peripherals, which was part of Wipro itself. In 2000, we became an independent entity. So here we have multiple solution offerings, as you see on the screen. One being managed print services, digital transformation solutions, intelligent office automation solutions, and lastly, retail billing solutions. So I'm going to give a small briefing of all the solutions that we have on offer. First being web retail solutions. Here we manufacture billing machines for retail stores, and we have close to about 2 lakh customers pan-India. And moving on to the corporate side, first off, we have managed print services, where we provide printing services for close to 600 plus odd customers. So here, the business is such that we deal with printing hardware based on requirement, and you would be charged per print. And this is what we do with managed print services, and we are now #1 in India on that part. Moving on to intelligent office automation solutions, Web offers the latest range of best-selling intelligent office automation solutions. Web is the authorized distributor alongside Rico to sell Rico products in the country. So here we have a wide range of enterprise digital printing, office automation, and industrial solutions on offer. And lastly, that you see, we have digital transformation solutions. Here we provide 2 services mainly, which you will see in the next slide. So you can move to the next slide. All right. So like I said, we have 2 solution offerings here, one being GST solutions and the second one being document management solutions. So let me start off from the bottom, which is document management solutions. Here we offer tailored custom solutions with the help of low-code development platform and offer document management, business process automation, business intelligence, and digital signature. Underneath this, we have various solutions for smart content collaboration, process automation, and remote working for enterprises. All this to simplify businesses. And the second product being related to GST, here we in fact hold the license called GSP, that is GST Suvidha Provider, from the government and appointed by the GSTN itself. So here we provide a host of features, and also we provide managed GSTR filing, reconciliation, data preparation, data validation, e-way bill automation, e-invoicing solution itself with ERP integration. So that is a small introduction about the company and the various services we offer. So today we have here with us our guest speaker and knowledge partner, Mr. Vishwanath, who has been associated with Lakshmikumaran Sridharan, Bengaluru for more than 6 years and has a decade of experience in indirect taxation. He is enrolled as an advocate in the Karnataka Bar Council. His previous stint with Big Fours in the indirect tax service line, and he has also completed his articles in taxation service line, including corporate tax and international taxation. We are absolutely glad to have you here with us today, sir. So he will be driving the webinar from here on. Thank you.
Sure. Thank you, Siddharth. Thanks, Web Solution for organizing another seminar or a webinar. It's no less than a seminar, because seminar is actually need of the hour, but because of this pandemic, we are doing it virtual level. So it's good to know that now the deadline of GST implementation for e-invoicing is fast approaching. At the same time, people are interested. The good to know part is the people are interested on understanding the nuances in e-invoicing. So today we will try to be covering what exactly an e-invoicing, the objectives, the legal framework, and for those who have already attended our session, they'll be aware of things. But today we'll be discussing at a greater length. So we'll try to take the scenarios so far, whatever the learning we have had for the last 3 months, because we deal on a day-to-day basis with many clients. What are the challenges they came across, and how to handle those situations? So those aspects. The process aspect is something we'll not touch upon in detail. Anyway, Web Solutions is always there, or system developers, system service providers, solution providers. Will be the better person to go at every field level. Today our objective, or the broad schema, what we thought we will cover is, like you can see, the mandatory field and non-mandatory field. The mandatory fields are the ones in red. Unless you understand the mandatory fields, maybe you can't click and process the next level. So legal framework, why it is in a different color is, the law is not only for the lawyers, but also for the general public at large, and also the companies. They should be aware. And okay, for in case my voice is too low or too high, kindly adjust it so that it will be easy for the audience. So so with that, what we intend to cover is something, the objective that everyone by this time will be aware, the government approach towards e-invoicing, but we'll try to give more elaborate discussion on those points. Non-compliance is something, what if the non-compliances, and how to tackle those non-compliances, or how to deal with those situations. How to be tax compliant in an environment where the tax laws are continuously changing. So those aspects, action points are there, questions is always there. We'll try to take up questions which has come to us previously before this registration, and the questions as and when comes on the board. And you can pose your questions in the chat box or however, and we'll take it up accordingly. So, but see, one thing is important: tax and technology are going hand in hand. Now, the information flow is like this, so that the data, the time you click and do any activity, that transaction data flows. So that once the transaction data flows, retrieving or taking it back is something will always lead to an audit trail. So those things has to be taken care. So with that, let's see and discuss the basics. We'll try to cover what, why, and from when. From when is very clear. It is already from October, 1st of October, for turnover of those associates whose turnover is more than 500 crores, and for associates more than 100 crore, because of the notification. It's from January 2021. So that is the agenda. That is the time. But what is important is, what is an e-invoice? You would have got FAQs, you would have read so many documents. But what we're trying to give is, our perspective of an e-invoice is, it's a GST document. A GST document should always essentially should have a tax component in it. So the tax component part of it is the critical part in the document. So therefore, it is a GST document, and it is an electronic record. So why these words are important? So when we sit decipher the GST law and at a closer look, the word document is clearly defined. It includes a written, printed record of any sort, and an electronic record as defined in 2T of Information Technology Act. So it's not that only GST law you have to read. We have to read the Information Technology law and other allied laws. So those are the aspects which we have to consider. And what is a document? It is a document includes a written or printed record. So those things, and it includes an electronic record. So therefore, since GST subsumes in itself, subsumes means it presumes that an electronic medium is always in place for various business processes, which either may be compliance, refund, or getting registrations. So the key process is, so it always assumes that nothing can be done manually. Everything is electronic. Therefore, the electronic means and electronic record, all these parameters plays an important role. So what is an electronic record? It means a data or a record, data generated or stored in an sent received in an electronic form. That is as far as electronic record is concerned. And electronic form means any information generated, sent, received, stored in media, magnetic, etc., etc. So these things, why it is important is, when we talk about our system, we have an ERP. An ERP will be there, a government's portal will be there. We may get a solution providers assistance and all. So all these are all the mediums, and all these are the computer network or the information. So these documents, records, etc., all these are to be preserved by the assessee. So in those contexts, these definitions and all will be relevant, not only from those records, even from the legal point of view. When we have to go and argue before a court or any other matter, these definitions are very and highly relevant. So that is about e-invoice. So e-invoice is a document, which is a GST document, and it can be an electronic record. E-invoicing system, the system what we are talking about, is a system where the taxpayer has to upload the invoice details and registers his transaction on the invoice registration portal. So it's a registration portal. It is not a preparation or generation portal. However, kindly note that in future, if we are going to put all the non-mandatory fields as the business requirement has a mandatory field, you may be done away with your normal ERP. You may require, if your business is simple and it can be done managed through the portal, you can do it through the portal only. Which means that it's not only the tax information, but various other information, including the payers details, bank details, purchase orders, which are all non-mandatory now. If you want to make it as a mandatory field, that can also be done. So at this point in time, when we discuss, it's not a preparation portal, because that is being clarified across India by the developers like NIC or GSTN. So that is very clear. So, but it's a database which can generate a portal related record. That is something you can see. It helps the taxpayer to get his invoice reference number along with the QR code. So that is what the system does. More important is, the moment you have an e-invoice, it can and it will, because of the invoicing what you are doing, a tax liability creation can happen as far as invoice and debit notes are concerned. And if it's a credit note, it can be a tax adjustment. So this creation of liability, etc., is the triggering point. So this document or this invoicing systems covers all those niche areas or areas which are very important and interlinked. So the model, like we all know, it's always from 35th and 37th council meeting, and the major reason for implementing is that reduction of tax evasion, not only in India, across the globe, wherever it has been implemented. Better taxpayer services, what they envisage. At the same time, ability to pre-populate into the returns. This is where our entire challenges comes in now. The moment you generate an e-invoice, it goes on to the GSTR1 and it flows on to 2A and 2B. Now 2B, various changes are happening. You can't put more than 110%, a red symbol will come, etc. Those things are there. So these are the ability to pre-populate the return. So these are the futuristic point of view and advantages what government intends to derive. And also assessee should be benefited out of these new systems. So the minutes are clearly there. You can read it for yourself. Those minutes are available, which the current system what we are seeing from October or from January for that matter is there. One interesting point is this was supposed to be done at January 2020. Various nuances and COVID effect, etc., has led up to October, and now January 2021. B2B, more than 100 crores where it is getting implemented. So therefore, this is the path at which we are. They have made legislature changes are happening, and it is continuously happening. So as we talked today morning, we got a few notifications, which in fact gave effect to the Finance Act 2020, and various new rules have come into place. So those updates are not covered at this point in time. We will definitely cover in our other sessions if you can. But at this point in time, suffice it to say that there are various changes are happening. Even e-invoice changes, this e-invoice legislature or legislative changes, is it enough or is it foolproof? And from a legal point of view also is important. Not only from system point of view, but from legal point of view also is important. So therefore, we have to see and wait how this notifications etc. are in place. So therefore, let us understand what are the legal framework, and then we'll get into the nuances and scenarios etc. Because unless we don't understand the legal framework, it will be difficult for us to say how a system has to be built, because we all have to work on a legal framework. So outside the legal framework is not permissible. Therefore, we have to see a notification number 88. This is the notification which is important for 100 crore and above assets, because this is the notification which amends the main notification 13 of 2020, where 13 of 2020 gave or was implemented for 500 crore and above assets. So this notification amends those notifications, earlier notification. Therefore, the date is fixed. So the compliance date is fixed. You have to comply from 1st of January. So there is another notification which is 73 of 2020, which gave special procedures for relaxation in October. As on today, when what we discussed so far, there is no similar notification for 100 crore and above assets, because we are not sure government is envisaging or not. But at this point in time, we may not be aware of what is going to happen. At the same time, what is important is any relaxation given for more than 100 crores and above, it will also impact 500 crores and above assets. Therefore, we have to understand those nuances. Maybe will there be a special procedure or waiver is not there. What is important for us is the next one, 72 of 2020. You see the second bullet point, which says the commissioner can exempt a person from issuance of an e-invoice. This is an exemption. So on the recommendation of the council. So if there is a serious issues where business can't function or various reasons, if you can put forth, maybe if the recommendation of council is taken into effect, the commissioner can exempt certain categories. So that is possible in case if someone wants to buy out the time, because this what I'm talking is a rule which is already in place, but it has to go through those process. 46R is the rule which requires every assessee to put QR code, which has an embedded IRN. So that is what is important. QR code embedded IRN is what it's that's a notification which is come into place. 138A2. This is what is about the e-way bill. The e-way bill portal or the e-way bill, the movement also requires a QR code embedded IRN. If it is there, it can be produced for verification in lieu of a physical invoice. So if a driver is carrying a physical invoice, if you have an IRN or a QR code embedded IRN, and that can be produced for verification. It can be produced for verification, but the officer's acceptance or rejection, etc., is always subject at the time of in the interception point of view. But legally, we can definitely take a position saying that I can show you the QR code embedded IRN, that's it, sufficient compliance, as long as the movement is on the tax invoice, not on the delivery challenge, because delivery challenge, the e-way, e-invoice, etc. is not. Anyway, I'll discuss those aspects also. We're looking at a tax invoice scenario. Couple of other things is 68 of 2019 notification. That is the notification which amended the manner of issuance of e-invoice. That is where the entire schema, that mandatory field, non-mandatory field, etc., all those things came through this notification. 71 and 69. Okay, 69 is important, where we have 10 portals which are recognized by the government. So any e-invoice has to go through those portals ultimately into the government, subject to the GSPs, ASPs, assistance, etc. So 13 of 2020, which I already discussed. So these are the couple of notifications which an assessee. I'm not burdening you with all these notifications, but what is important is kindly understand that unless there is a notifications or a rule or section in place, the background can't be understood in a better manner. So my day will be done if I can. This is the main slide which I want to focus. As long as the audience, if they understand the very niche difference between these two points, my objective of taking this webinar is done. What is important is section 12 and 13 is something called time of supply, and section 31 is about tax invoice. There is a C difference. Time of supply is always on a point to say when you have to when you have to pay the taxes. Section 31 says when you have to raise an invoice. So therefore 31 is something people or 12 is something where people does not foresee it properly, or they may raise inadvertent invoices or maybe just because a time of supply has arisen, they would have raised an invoice. So what is important is every aspect of it has to be seen in its proper perspective. For example, take a case, I got an advance I have to pay tax. So the question is it a time of supply? Yes. Is it a tax invoice? There the question stops. So should you raise a pro forma invoice or a receipt voucher, or you should raise a tax invoice is the question which will come up. Because what I'm going to talk is about the practical aspects which we are dealing on a day-to-day basis, which I thought I'll share it to the audience so that it will be useful at the same time. Take a case that I got an advance for say services, not for goods, because GST for payment of tax for the goods is not applicable at this point in time because of the notification. So services, I got an advance. I paid the taxes in that month. Now the question is, should I raise an invoice? Now, if your contract is such a way that your contract itself says that the advance in itself is a milestone for your continuous supply of service, then obviously that is the triggering point under 31.5 to say that you have to raise an invoice. Therefore, your invoice raising and time of supply coincides on the same day. Therefore, you will be bound to raise an invoice. At the same time, if your contract is such a way that it's only adjustable advances, wherein your invoice will be deferred. It all goes how you structured your contract. If your contract is not structured in a proper way, department can always say that boss, your contract only says you should have raised an invoice at the time of advance. But we foresee that it is not a time of supply, but I paid the tax, but I did not raise an invoice. So these timing differences, all these things can come up. Therefore, one has to closely look at these two sections. What is section 12? Section 12 is about time of supply for goods, and section 13 is about time of supply for services. And section 14 is there where there's a change in the rate of tax, etc. and all. That we'll deal it at a later point in time. Section 31, you have to see for yourself whether your time of supply has arisen at this, your time to raise an invoice has arisen. Take a case, the sale on approval basis. Sale on approval basis, what it says is you can raise an invoice, but you will move the goods. So e-way bill, etc. will be taken care maybe through a delivery channel if it is a sale on approval, etc. Because time of supply has not triggered. Now the question is the time of supply triggered, and is the time to raise an invoice also triggered, and when? So this is the key point an assessee has to understand. Based on this, then the actions what you take, either through your ERPs by way of accounting ERPs, or you go through the latest the tool what they gave, or you go through the various mechanism, or you can take assistance of various solutions provider. All those things will come. So what I'm trying to emphasize here is, as long as the time of supply concept and the section 31, if these two are understood in a proper perspective, then only an e-invoicing schema can work in a better way and a better tax compliance can be achieved. So that is something I thought I'll emphasize here. Now moving ahead, Rule 46. Rule 46 is more about the fields what an invoice has to contain. Kindly note, there is Rule 46, there is Rule 49, there are other rules which says for various documents. So Rule 46 is the rule which talks about tax invoice and the particulars. So which essentially means that these are the parameters which one has to consider. At the same time, Rule 48 is the one which got amended now, which now says that you have to include the details in INV1, and INV1 goes on to the mandatory, non-mandatory fields, etc. So those things we have to include. The danger rule is the rule sub-rule 5, which says that invoice issued in any other manner is not treated as an invoice. So this is where the entire issue or the hue and cry of the industries will be there, because this invoice, whatever you issued, not doing this through manner is not an invoice. Therefore, my at the first point of time, my invoice is not generated properly, and there is a problem with the recipient taking credit. Those issues can come up. And another rule, sub-rule, which is Rule 6, which says that original, duplicate, and triplicate copies can be done away if you're doing it. Therefore, so you can do away with the printed version and you can follow the online version or the electronic record or the electronic form version, which I defined in the beginning of this presentation. So these nuances you consider. So now let us move ahead and see on whom it is applicable. So having understood so far, and the difference between section 12.13 versus section 31, if this is understood in a proper perspective, then what are the contents, etc. Then moving on whom or on what transaction we have to apply. So like I said, 13 of 2020 being the main notification, which is getting amended again and again. Earlier there was other notification, but barring that, currently what is in force is this 13 of 2020. Whenever we talk about a B2B, kindly note all these things B2B and all is coming through the notification itself, which says that hereby notifies registered person, blah blah blah, etc. to a registered person. So this is where the B2B chain is coming. And now, because there was a small gap in this notification, wherein in a financial year was given, now they have amended it to say any preceding financial year from 17-18. So therefore, from 17-18 and onwards is the financial year. Those financial years, if you are crossing 100 crore in any year, take for example 17-18, you crossed 100 crore. Maybe you would have not crossed in 18-19, and you would have not crossed in 19-20. Still, e-invoice will be applicable. So that is the point which we have to consider. So likewise, now 100, 500, earlier it was 500, now it became 100. So again, the 100 and 500 in this 13 of 2020 is again amended, like 88 notification what I told. So 500 crore was there because that notification was to be implemented from October. Now it is implemented from January for 100 crores. So that is one. And for exports is added. So it should be supply for exports and not all exports. We'll just discuss and debate. So another key important point in this notification is the aggregate turnover. So because in our last webinar, people were asking to elaborate more on aggregate turnover. We thought we'll elaborate more on the turnover concept now, so that let us be clear on it. What the notification envisages is a situation where a registered person having an aggregate turnover in a financial year is what it says. And the term aggregate turnover means that aggregate value of taxable supplies excluding RCM, which is my inward supply, which is RCM, that I have to exclude. I have to include my exempt supplies. I have to include my exports, and I have to include my interstate supply if it is between same PAN but two GST INs. And the taxes I have to exclude. Basically, three things I have to exclude. Taxes, obviously, I have to exclude. I have to exclude my inward supply on which I pay RCM, which may be either for domestic reverse charge or for foreign reverse charge. Those I have to exclude. And I have to exclude the third point, which is in inward RCM and the taxes is the 2 points we have to exclude. At the same time, what we have to include is what is important: taxable supplies, exempt supplies, exports. Zero rated is also included, because if I supply to SEZ, still it is a taxable. So it may be zero rated, it is still taxable supplies. It will come within the purview of this taxable supplies. Interstate supplies between two GST INs of different, if I make a stock transfer, etc. There, the law envisages by way of a schedule 1 activity as a supply, which is taxable. Therefore, it again falls within the ambit of its aggregate turnover. Those things we have to include. Generally, we have these questions. What will happen to the advances? Like I told, advances is something now we have to decide. Now the question, the bottom line in the advances come to a point that whether the advance in itself is a milestone where you have to raise an invoice and that in itself become a taxable supply or not. Therefore, it all goes back to your contracts. Cross charges are there, where the cross charges, like the supply which is happening between two distinct persons in the context of services. We are seeing in the context of goods, at the same time we have to see the context of services also. Books versus income tax versus GSTR. Now, what is this turnover we have to consider? Because in my books, I will go on, say, Ind AS basis. I may take it on an Ind AS basis and say I recognize the revenue. But in effect, I did not raise an invoice because my section 31 is never getting attracted. I can't fit in any of the section 31. So what should I do? So you might not be required to raise an invoice. It may be for the purpose of books. Now, how to do a reconciliation with income tax? Income tax, you might have paid advance tax or normal tax, or you would have gone through TDS, etc. And GSTR 1 and 3B, this 1 and 3B always goes back to back with the point whether it is a taxable supply and did you report it in one under advances, or again advances or whatever columns you are looking at, or whether it's a taxable turnover you declared. Therefore, it becomes a taxable supply. And anyway, the moment you admit there's a taxable supply, a tax position or a tax liability will get created. Therefore, this reconciliation is important. So in all these situations, again, it boils down to a point whether the section 31 is getting attracted or not. Outward RCM. I am a service provider. I also have a tax liability where my outward is taxable under RCM basis, say sponsorship. I have a sponsorship fee income, and I have to pay under, I need not pay my, the person who's paying me, he has to pay under reverse charge. I have other normal services also, or normal supply also. So in those cases, the forward charge, I have to include those turnover also for the purpose of aggregate turnover. What will happen to the net of sales, sales returns or credit notes, adjustments, etc.? Now the point is, the aggregate turnover, what is the turnover you declared in 1 and 3B? The entire GST concept now, they are looking at a scenario where it is system driven, and the way you are reporting either B2B or B2C, whether you are doing net of or each line item is the critical point. There are borderline cases where we are facing now currently, and there are a couple of our retainer clients who ask us on this kind of questions. What will happen if I add this credit note, debit note? I will cross. If I take the effect of credit note, I will not cross. But if I don't take the effect of credit note, I will cross. And for them, the issue is the credit notes are issued over the couple of years afterwards, or immediately after the within the timeline provided in the law. So there may be financial credit notes, there may be GST credit notes, all those issues are there. So suffice it to say at this point here, we have to discuss on a case-to-case basis what exactly is the turnover you are looking at, and how did you report. And just because it got reported, are you enabled? And are you really assessees whose turnover has crossed 100 crores, or it is merely a data which has flown, which you have to rectify through rectification of 3B. So those aspects has to be taken care. A receipt versus accrual. Again, I am an assessee, I go on a receipt basis for income tax purposes. Maybe accrual concept I never followed and I don't know, but it can't happen under GST. Like, you should be aware by this time, if you are a service provider, the point of taxation came long back in 2011 to come out from the concept of receipt to accrual for the purpose of service tax. So GST, even goods also in that context. But at the same time, what is important now is the time of supply here and the tax invoice recognition. So when did you raise, and whether your time of supply is triggering is something you have to understand. And B2C supply also gets included as long as it is taxable or exempted. Both of them will get covered. Take a case, I'm a healthcare service provider. 199% of my turnover is healthcare only. But only few things, I will raise an invoice on a B2B basis, B2B or B2C also, which is taxable. So in those contexts, the turnover of healthcare gets added for the purpose of aggregate turnover. So we will see whether e-invoice has to be raised on what, but to compute the turnover, you should include. So what I'm trying to say at the bottom line in aggregate turnover is, you should understand what is taxable, what is exempted. Either taxable or exempted gets added up into this. It excludes RCM under inward, but it includes RCM on my outward. It includes B2C outward. Advances, you kindly check your contracts, how you are dealing, and what is your manner of booking, etc., and all those things. So we can take up the questions when it comes up at that point in time. So then moving ahead. So I try to clarify about aggregate turnover. So financial year is clear. It is from, though there is no specific definition, the point is from April to March is the turnover we have to, financially we have to consider. Now, the couple of other interesting points in the notification which one has to
Mr. Vishwanath, I'm sorry to interrupt. So before you move ahead, let us take a quick 1 minute wherein I launch a poll. I hope that's okay with you, sir.
Sure, yeah.
Okay. All right, so I'll be launching a poll quickly for the rest of them. I'm launching it now. Yeah, I hope you're seeing this on your screen. Have you finalized your e-invoice vendor? If it's a yes or a no, we'd like to know. So I'll be keeping this for the next 1 minute before I end the poll. Also, we are still taking up questions. So I did see a few of them have asked questions. Any extra questions, you can simply put it in the chat box. We will take it up towards the end of the session. Okay, thank you. I'm ending the poll. Yeah, Mr. Vishwanath, you can carry on.
Thank you. So what I was talking about is the aggregate turnover. Now let us understand what exactly is a registered person. So the concept of registered person is important because what, like I just showed you in the notification says that it should be from a registered person to a registered person. So B2B is the activity what they're trying to cover. At the same time, a registered person means a person who is registered under section 25, but does not include a person having unique identification number. So whether who is registered is sufficient. If that is the case, now you can see now the system now reacts based on the active GSTN status. So there can be possibility that a person who is registered GSTN may be cancelled. So system may not allow you to go ahead and raise an e-invoice on those cancelled registration or under suspension or who are inactive for various reasons, which government has thought it deemed to be fit. However, the definition of registered person as it stands, it says that is a person who is registered. So at that point in time, he should be registered, and his registration active status is generally, now we are discussing law with the technology. So the law with the technology, if you has to see in that context, then a registered person means an active GSTN holder is something you can draw an inference, but not a conclusive inference, but an inference you can draw. So let us see the scenarios under which this e-invoicing will be applicable. First, I am making a domestic sale of goods, or I am supplying a services, or both to a person, and he is having a GSTIN. So he is having a GSTIN, and I am the person. I also have a GSTIN. So any of my supply to him will get qualified, and I triggered subject to the condition 100 crore. Whatever I will be discussing is on the condition that your turnover, you understood the concept of turnover in a financial year, you would have understood. So with that in mind, your e-invoice will get triggered. Supply between distinct entities under the same pen, either maybe a cross charge, or you may think about stock transfer of goods, etc. All those things will get covered. Even a normal supply, intermittent product which has to go to your other factory and get supplied back, or it can get exported or sold, etc. All those things can get triggered or covered. Export is something you have to understand what the law or the notification is trying to cover. May be not be in the context of sale of approval or export returns and all. It should be in the context of supplies one can take into account, because if you look at exhibition sales, it is an export, but it may not be a supply. So we have to see whether the law has envisaged supply for export or export per se, because every export, if you want to tackle, then even your FOC, if you are supplying to your customer, foreign customer under warranty, can get triggered. So forget the normal export for consideration. So the context in which we have to see this export, and how do we explain if at all a customs officer asks why this is not accompanied by an e-invoice. So we have to figure out the transactions on your export category, and at the time of your implementation, did you take care of the situations? Whether your implementation time itself, your invoice serial number, etc., should have actually taken care of all these situations. Whether it is an export for supply, whether it's an exhibition, and because now if you do manual changing, and again it will take different time. So did you automate your system? All those things can come up as a triggering point. But since we are in the December month now, so we have to cope up with the law, and we start complying with that. So it also covers supplies to government as long as the governments are registered. There are, kindly note, government is different, government entity is different, governmental authority is different. So PSUs are, they are separate categories of persons under their definitions. So what you have to understand is the real meaning of whether ultimately it boils down to a point whether he has a GSTIN or not. And again, a person in government can have a GSTIN only for the purpose of TDS. Still, he may qualify as a B2B supply, though he may not have a regular GSTIN. So to that extent, your supply to him can still be considered as e-invoice, whether or not he takes credit. So the point is not whether he takes credit or not. The point is whether did you comply or not with a B2B. So sale of alcoholic liquor for human consumption, when it is outside the purview of GST, we have to see whether it can get covered or not. But petroleum products are within the ambit of GST, but the taxation is deferred, is the way the charging section has been framed. So those nuances we have to understand. However, bill of supply definition is clearly says that those are all has to be removed through other invoices like excise invoices. So therefore, to that extent, ideally, e-invoice should not trigger. So supply of exempted goods, yes, exempted goods and exempt service exclusively, it will go under the bill of supply. It need not have a tax invoice. Therefore, essentially a tax invoice should not get triggered. So you kindly ensure that, you instead of raising a bill of supply, you end up raising a tax invoice and you report it to the portal, and all those nuances will come up. Though the tax amount may be zero, or you may report a tax amount, maybe inadvertently. Those, how to resolve those, we'll discuss it out. So then only question is registered person only for the purpose of reverse charge. There are associates who only registered for the purpose of reverse charge. Your supplies to them can still be a B2B supplies. So those aspects you have to understand. So now again with numbers, it's very simple. Less than 100 crore, e-invoice is not applicable, provided you understand how to compute 100 crore. That is one. And SEZ developer and unit, why you are giving a distinction is because in the next slide you will see unit is excluded from raising an invoice. However, developers are not excluded. So those aspects you have to consider. DTA unit turnover is 50. I have an SEZ or UOU, which is turnover is 60. Now the question is, if I have a DTA 50 crores and SEZ unit 60 crore, on the DTA units invoices, I have to raise e-invoice. Take a case DTA and EOU. I don't have an SEZ. I have a EOU 50, 60. EOU, there is no special exemption unless, like I told in my previous slides, you have to 48 for that rule, what we just saw. Go to the commissioner, get the approval of GST council, and maybe you may be a category of exempted if a representation is made in a proper perspective. If what I'm talking is only an ifs and buts, but yeah, so there is a power. So if you want to go and give your submissions to the council, etc., to say that can you exclude me as a category for raising e-invoice for various business reasons, possibility can be there. But however, as it stands today, there is no exclusion. DTA and EOU, when you have these two categories, you are bound to follow as long as your turnover is more than 100 crore. 100 crore and above. So supplies to a registered person is 60 lakh crores and an unregistered person is 40 crores. Here, only 60 crores you have to raise e-invoice. For balance 40 crores is a normal invoice what you will raise. So that is the point you should understand. So exclusions. Kindly note, this is exclusion, this is not exemption. Because when the notification itself says that they need not do, it's different from notification exempting from doing, exempting it. So these nuances in the legal language you might have to understand. So these exemptions, these are the exclusions. They say that, kindly note, the first point is not coming through the exclusion, but way of an interpretation. Because it says that supplies by a registered person to an unregistered person is effectively not covered under 30 of 2020. Therefore, B2C supplies, there is no requirement at this point in time. Similarly, SEZ units is clearly coming out from the notification. Insurance, banking, all these category, GTA service provider. Okay, there may be 100 crore and above GTA service provider. Okay, now the question all boils down is, he is a GTA service provider. He may also charge you a rental income. He may charge you a rent, or he may charge you some invoices. It all goes down to my procurement or my sales. If I am a GTA, I have other various lines of business. Some of the clarifications in the FAQ says that it can be at entity level itself. So that if the moment I am a GTA, I'll be exempted from, excluded from raising an e-invoice. So therefore, I may not do it. I may not follow it. So therefore, how do you differentiate your invoices from a person who is registered and unregistered, and how did you do your KYC? When I say KYC, we'll discuss more about it. But yeah, did you do a proper KYC of your customer at the same time of your KYS of your suppliers? So now coming to the documents, this is the critical part. And we as a lawyers, when we sit and decipher a notification, we decipher including commas, starting from the point GSR, etc. Everything we want to decipher. So when we see this notification in holistic perspective, has the system development, etc., which has gone so far, is that tax invoice, debit note, and credit note. Export invoice is nothing but a tax invoice which you have raised at the time of exporting the goods. These are the three documents which they essentially want to cover. However, there seems to be a legal gap in the context in which this notification has been framed, especially to the extent of debit notes and credit notes, which there could be some overlapping, which can be corrected maybe by government or through FAQs or clarifications. Or, if it is left unchecked, maybe a debit note and credit note, if someone associate has not raised an e-invoice, whether they can really say I have not complied with the law, and etc. is the point of debate. However, suitable clarifications should be awaited in this regard. But good thing is the delivery challenge, bill of entries, exempted bill of supplies, receipt vouchers, payment vouchers, and other commercial documents like pro forma invoice, etc. are not covered. Because other GST documents and other non-GST, which is commercial documents, are not covered under the ambit of this. And what about an ISD invoice? ISD, if I am an ISD, for your information, ISD is a registration wherein it takes the invoices and distributes the credit. So therefore, the act of a supply in itself can be said to be missing. Therefore, the ISD can be outside the purview. But what you have to understand is, if I am a normal GSTIN and I am raising an invoice to the ISD, say for example, your software service provider, maybe raising an invoice on a company. So that can be common software across India. So now the question is, when we raised an invoice on the ISD, whether they have to comply on e-invoicing, etc., is the point you have to discuss. So it's about not about the ISD raising an invoice, but the invoice raised to ISD is what is important for e-invoicing and not the other way. That is something you have to understand. And few scenarios we will say. Cutoff date. Now the cutoff date is January for 100 crore and above associates. So these questions are bound to raise now also, and it has raised earlier also, even for those associates who are migrating from September to October. So where services are provided in December and invoices they are raising after January. Now you can see in the e-invoice portal and other documents or other information available in the public. They say that the invoice date should be 1/1/21 for associates to enable. Therefore, if the invoice date itself is before January 1st or which is December 31st, e-invoice will not be enabled. That is the functionality which the portal has built. But what is important for you is, did you understand section 31 and 12 and 13 in its proper perspective? So then only the e-invoicing can be understood in its true sense. Similarly, take a case where goods sent on approval basis before 1/1 and it is removed, say for example July, 6 months is over now. So now you will end up raising an invoice because your time of supply, which is section 31(7), can be said to be triggering now. So therefore, a goods which has went almost 6 months back or more than 6 months back, you will end up raising an invoice. Otherwise, if there is a delay in raising an invoice, also it can get tracked by way of an e-waybill. Now the business intelligence is so much that every delivery channel through which the goods have gone can be tracked up, and they can come up with those revolving queries, etc. So those things you should understand. Similarly, job work. Kindly note, though this ITC 04, etc., all those forms can be deferred, etc., are there. Still, e-waybill and all these movements would have gone through. So there is still information available. So we have to understand whether the goods really returned within 1 year or it is not returned 1 year, and did you comply with the tax laws, and did you raise an invoice? If you are raising an invoice now, and is there any delay, etc., all those points should be taken care of. So, and therefore a debit note should be raised or a credit note should be raised, and with interest or without interest. So all those questions are there. So there are various scenarios. So these are the scenarios which we handle on a day-to-day basis, which we thought we will update at this point in time. So now there are some few FAQs which are available in the public domain also. So they say that whether e-invoicing is applicable on exclusively exempted or nil rated. No, that's clear, because it is gone by bill of supply provisions and not by a tax invoice. Similarly, a financial credit note and debit note, if you are reporting it, should you report? Answer should be no, because you can't report a commercial document. Like I told in the beginning itself, e-invoice is about a GST document. So as long as you are clear about the document what you are raising, there should not be any problem to it. So now the question is whether e-invoice is applicable for invoice between two GSTN under the same PAN. It will be yes, as long as there is a supply between two GSTINs. That is something you have to understand. We got a query also in the last session, which we could not take it. Now we are taking it up, and it will benefit those associates who attended our seminars at that point in time, and for others also. Wherein high C sales and bonded warehouse sales, whether e-invoicing is required. This is not required unless you are clear about the transaction falls under Schedule 3. So as long as the activities falls under Schedule 3, it will go outside the ambit of supply. Therefore, e-invoice need not be applicable. So likewise, reverse charge. Reverse charge are of two kinds. One is forward charge, where the client will pay, and the reverse charge is one. So when we say two kinds, kindly note, from perspective is what I'm saying. Supplier's perspective, recipient's perspective. So supplier who is raising an invoice, if he is registered and he has to raise an invoice, so his activity will be there where he will be entitled. However, if the person who is receiving under reverse charge, for him on the self invoice or under those provisions, he need not raise one more e-invoice. That's the point we have to understand and differentiate. So supplier perspective is important, not the recipient's perspective, as far as the reverse charge is concerned. So likewise, online generation of IRN, will IRP send email? This is something, this is a cost at the level of even developers also, which are NIC and maybe in foreign countries there is a position where government themselves will send this out to the buyer where they can take the cost of it. But in Indian scenario, we know our supplier, we know our customer. Therefore, IRPs and all will not send it out. It is our responsibility, and we have to send and receive those information. Maybe the cost of this, etc. Or if you are integrating with a software solution provider, you can see and what is the best solution you can offer. All those things can be discussed and taken care of. So whether e-invoicing is applicable or is carrying e-invoice printout during the transportation. This is something very obvious question. Currently, no much of writs are there on the court on the e-invoice front of it, because even if you are catching on the road or if it is intercepted, the e-invoice for 100 crore and above SSCs or 500 crore above SSCs, the system is there. However, what is important is if you are carrying a printout which is hard copy, let it have the QR code embedded IRN. So that will be easy for verification. So though we can show at the later point in time, I have a soft copy, it is always better to have a QR code embedded IRN so long as the procedure is set. So what I'm saying is my perspective. So it's simply a point so that your consignment should not get stuck on the road. Just because you may have a online or you may have it in the mobile and e-invoice, it's always better you give a printout of that, so of it for the better compliance or ease of traveling. Next is there are 10 common portals, out of which one is active. Maybe others will get activated as long as the portal gets hit. Then based on the number of volumes, etc., it may get activated. It depends. It all government's portal or government managed and run portal. So this will be enabled if the portal has high volume of e-invoice getting generated at one point in time. Therefore, what is important is how did you ensure your compliance, whether you went with your in-house development or whether you went with your solution provider, and how fast you can retrieve it. All those points are there. So now let us see how. So with this, I'll just move on to how portion of it. I'll only take few minutes. I'll not take much of time because we have to take Q&A also. So how portion of it is like, there's a buyer, there's a seller, there's a tax authority, there's a solution provider. What is important is supplier's perspective is important. Like I told, he will raise a e-invoice which will go to the portal, and portal will gives you back a QR code embedded IRN that has to be sent, will be sent it back, and that you have to forward it to, which will get auto-populated into a GSTR1. Maybe GSTR2 and 2B also will get auto-populated immediately. So that is where the catch, and that is where we have to see. If you have raised a wrong invoice, etc., we'll deal with it in a couple of minutes. But yeah, there's a thing. So what is important? Again, 4 fields are very critical. Kindly note these 4 fields are very, very important. There should be no change in the supplier GSTN, because this, why I say this is this. We often get a query from our clients who are our returners. They say that, I should have raised invoice from Karnataka, but I raised an invoice from Tamil Nadu, but it is under my GSTN because PO came here. I could not raise there. So what should I do? So these are the points which we generally come across. And financial year, you should have been raised on 31st March, but I unfortunately raised it on 1st of April. So this is what I'm talking about last year transaction. Now e-invoice is there. This financial year will be auto-populated through the documented date. That's why you can see there's no document date in this 1, 2, 3, 4. Document date is inbuilt into the financial year. So your date of document is very critical. Document type is again invoice, debit note or credit note. That is something you will be aware by this time. It can't include any reimbursement invoices, etc., unless it is not a tax invoice. So document number is important, and this invoice series, kindly note this invoice series. So if these 4 fields are very important, without which e-invoice cannot be generated, and any change in any of the parameter, your e-invoice number itself will change, which means you will end up having a cancellation of an IRN if it is within the 24 hours. So what comes back is a 64-digit character. You need not memorize it, but we have to ensure that 64 character is inbuilt in our QR code. When someone scans it, he should be enabled to see it. Otherwise, an ideal and best practice is to affix on the invoice, ensure that it is not 63, it is not 65, and someone is seeing it, he should be able to read it. So that otherwise, maybe though it can be possible that scanner may not work, and he may start checking the numbers. So a number may be missing. It is not separated by commas also. So that will be very hard and problem. So what I'm saying is a legible copy should be there if it is a better practice is what I'm saying. So these are the QR code will come back. Fourth point is important. It not only tells you the date of invoice, it also tells you when you generated an invoice. Take a scenario where I should have raised invoice on 31st of January, but I ended up in 15th of February. So e-invoice will capture the 15th February, which will end up paying the liability either in January or February. That is something you have to see. Where did you, when did you account and when did you create a liability? So there are a couple of portals. Kindly note this portal is the portal for trial, which is e-invoice 1.trial. This is a trial portal. This is not for production. So whatever you have to do, you have to do it in this portal in the production. There are some questions. There are some updates also. This is not the latest update, but the latest update says that if you are doing any production version from 15th of December onwards, it will not be deleted, etc. So kindly take care of all those things. You kindly do it in your trial version and not in production version. Because the data will get freezed, you may not be able to delete or do any act, and you will end up reporting it to the portal, which get auto-populated into 1 and 3B, etc. So now schema, I'll not discuss mandatory and non-mandatory fields much. So what is important is ensure that your business requirement is taken care by way of a mandatory and non-mandatory fields. You can discuss the fields at a later point. Modes of generation is only one, electronic only. In electronic, you have offline tools like now we have GEPP tools and we have bulk utility tool. Likewise, direct integration or through GSPs. If you are going with GSPs or ASP or you are going directly with your integration, kindly ensure your IP addresses are whitelisted and you have done adequate testing. That is what is important. If you are, unless you don't do testing, you may not be enabled for production version. So ensure if you're doing through direct integration, you take care of all the things. Kindly note in product, there is an issue which came up recently, which because of today morning only. Now the e-way bill is 200 kilometers. So now if you're doing a direct integration, you should not only change in your normal ERPs, but in your integration process also. Because otherwise you will have an error and your e-way bill portal will take care, because 200 kilometers it will generate a number of days. You may have an internal error. What I'm saying is you should be updated with the changing tax laws, especially the configuration fields, and those fields should be there. Otherwise, you should go with the assistance of solution provider who can get updated and who can give the better results in a faster way. So those things kindly note. So cancellation. So by this time, few associates who have already done the testing and all, they will be aware. IRN cannot be deleted; it can only be cancelled. Still, a trial will be recorded and it can be done within 24 hours. Anything more than 24 hours is a case-to-case basis we have to handle. Whether a credit note is a correct option or whether reporting or etc. is a correct option, we have to see on a case-to-case basis. There is nothing called amendment of the e-invoice. Once an e-invoice is generated, it will get reported into the portal. Only thing is you have to amend the fields, except for the 4 fields what I told. Other fields you might require amendment, you can do the amendment. And those amendments should not result in such a way that it ought to have been a credit note, but I did an amendment. Kindly check. That's why understanding the tax laws is not only important, but it is complex also. It's a complex tax laws. So what is important is, did you follow the correct tax process or the practice is what is important. So expiry of e-way bill. There is nothing called expiry of e-invoice. Sorry, e-invoice will not take it because the trail is already recorded. So what if you are non-compliant? Non-compliance. One is if there is a delay, there can be an interest. Non-reporting can be suppression, fraud, etc. They can say they can allege penal consequence for supplier. From recipient point of view, we always have this problem, because if you are not raising a proper IRN or QR code embedded e-invoice, his credit will be a problem. However, if there is take a case where you did not raise an e-invoice, but at least you can show him that I have paid his taxes, that will be a duty paying document. So if you can give him those proofs saying that I have paid your taxes, can government take this as a proof and allow the credit for the recipient. So there are cases where they paid the taxes but they could not show it in GSTR1 because of various reasons. Similarly, e-invoice you could not raise for various reasons, but later on you can show that duty paying document is possible. However, now from January, every invoice is recorded. Therefore, it is incumbent upon the supplier as well as the recipient to ensure that a proper e-invoice wherever is required is generated. So interception is always a problem. Either it can be supplier's problem or recipient's problem, depending on who has undertaken the responsibility of transportation. So with that, No, I just leave few points for you to understand and take care. Know your suppliers, know your customer. We will tell you, if required at a greater length, we can have a debate or a conversation how to know your customer, what checks and balances you have to keep. Check whether you can do in-house or through external consultants. Amend your contracts and POs. That is the critical thing. Train your staff. Let us have minimum data entry errors, and let us have a seamless internet connectivity. So other points are always there. So I want to just
one moment, Mr. Vishwanath. So I'd like to launch one more poll before we quickly get into the questions after this. So just take 1 minute over there. All right, so I'm launching one more poll. I hope you're seeing this on your screen. So if you haven't decided on a vendor, are you willing to finalize a vendor soon? So I'm leaving this for the next 10 minutes. I'm leaving this for the next 1 minute, and then we can quickly get into the questions. So I have seen a few questions on the chat. So what we're going to do is first we're going to take up the questions that have come through the registration, and then we will get into this. All right, thank you all. I'm ending the poll. Yeah, Mr. Vishwanath, you can carry on.
Sure. Yeah. Before we just go to question and answers, a few questions which we have issues on a day-to-day basis since we are dealing with multiple clients. Couple of questions, I'll take a couple of questions from this here itself. So I raised an e-invoice wrongly. When I say wrongly generated, delay in generation is different from wrongly generation. Kindly note. When you say I have generated e-invoice wrongly, which means you should not have generated, but for some reason you generated the invoice. Now the question is, you should have cancelled it. Now the question goes to the next point. E-invoice generated twice, or it should have been wrongly generated, but cancellation time is something very important. So the moment you raise an invoice, cancel it out so that it can't get data flow through the GSTR1. However, if your time limit is expired now the question remains is whether what is the route we have to approach, whether credit note or whether can we intimate the officer. Kindly note, it all depends on what was the reason for raising an invoice and how was your contract with your customer. If your contract with your customer is such that I raised an invoice, goods moved for some time, and then it is getting rejected, then you always have the right to issue a credit note because your sale did not take place and it is well within the ambit of 34. However, you raised an invoice, but you're simply raising a credit note for it. That will leave out a trail. And did you follow a proper tax law compliance is something which will be opened up. So it is always better to explain the officer why you raised an invoice and why you don't want to report it, in your GSTR1, though it is auto-populating, why you want to edit it and you don't want to show it in your liability, and then give a report by way of a voluntary letter or compliance, etc. is something you can work around, or you can discuss it at a greater length. So warranty free of cost movements, it's not a supply. Kindly note, these are not a supply concept. These are only a movement because supply would have already taken place on your first invoice. So these are all, e-invoice will not apply if it is moving under delivery channel. Same way, if you are moving out of India, kindly check it is for warranty or non-warranty. Those things you should be clear. Unless you are not clear, and then it goes to the next point. Delay in shipping bill or unable to export is a different category in itself. However, free of cost, I exported, I filed a shipping bill. Just because you filed a shipping bill, it does not become you should raise an e-invoice. You should understand whether it is a supply or not, whether you will get a consideration or not. Those aspects are important. This question is, because of export of this product could not take place, I raised an e-invoice. It went to the port, but again, it is not going to go out. Now the question is, did you file a shipping bill or you're not filing a shipping bill? And if you have filed a shipping bill, then you will have other issues to resolve from customs aspect also. And if you have not filed a shipping bill, and if you have filed a shipping bill, you have to answerable why you have to amend the shipping bill. And if you want to re-export it to, instead of country A, you have to export it to country B, or you have to end up in, taking back the goods by way of inward individual, etc. Those things you have to work around and you have to discuss with your consultants, as the case may be. Now, goods intercepted on the road. That is something very, common if you are not going to have an e-invoice in a proper perspective. Now, this non-compliance will be a huge, huge penalty for you that you have to understand. So, old invoices cancellation and raising a fresh invoice. Now, your contract should support all these aspects. If you want to raise an invoice now by way of cancellation of an old invoice, why you did not pay taxes at that point in time and why you are paying at this point in time is all the points you need to understand. So, change of from B2C to B2B. As of now, portal does not allow, because once it's very simple. If you have a GSTIN, if it is active, it will allow you to do. Otherwise, it will not allow you to generate an e-invoice. So therefore, the question of KYC, know your customer. Know your customer means know his GSTIN is important, whether it's active or not. At least for the purpose of e-invoicing, as a basic requirement. So with that, I leave it open for other questions which can come up so that we can take it up accordingly. So I hope I was not too fast, but I tried to cover and give a glimpse of the e-invoicing, which from a larger perspective. So we did not get into the nuances of what field, non-mandatory field, etc. All those things we can discuss at a greater length. So with this, I will leave it open for questions. So
yeah. So how do you want to go about this? Can we take up the questions that have already come in, and then we move on?
Sure. Yeah. Better. We will answer it out, and any unanswered, we will take it up.
All right. Okay. So the first question is, how can we ensure e-invoicing compliances for purchases as we have both greater than 100 crore and lesser than 100 crore vendors?
Okay, so I am a supplier. I have both. So I'm a GST holder. I have my purchases are 100 crores and above vendors are also there. Less than 100 crore vendors are also there. 100 crores and above. See, what is important is, did we send a communication well in advance asking him whether his turnover crossed 100 crore or not? So how do you know? There are 2-3 ways of knowing it. One, check his GST in the portal. You will get to know whether he has crossed 100 crores or not. Second thing is, if his GSTN is not enabled, still if you have a doubt saying that his GSTN may be enabled, you may ask him through a declaration saying that whether you are 100 crores or not. Now, after knowing he is crossed 100 crore or not, or less than 100 crore, what practice you are following, you can continue to follow, because e-invoicing is not applicable, because you are sure at this point in time that he is not crossing 100 crore. But it is better to have an indemnification. Therefore, your current contract clauses, etc., may have to be changed, because we never know, after some period in time, they may cross 100 crore. Maybe not in January, maybe February he may cross 100 crore. So that turnover he would not have considered. Like I told, his turnover, he would not have factored he currently would have factored the credit note effect. If he ignore the credit note effect, his turnover may cross 100 crore. So what is important is, when we get into, should we instruct our supply chain to ensure that did he take the proper information from GST perspective, so that he need not end up raising a e-invoice later on and it gets reflected in my 2B in the next month, which will impact my cash flow. So there is no one solution to it. There are multiple things and multiple people have to get involved. Not only the finance and tax team, but from the supply chain team, from the legal team, everyone has to sit and discuss and ensure that the supplier is able to raise an e-invoice properly. And if he has any other business reasons, etc., you may have to talk on. So there's no one solution to it. There are multiple answers to it.
All right. So we'll move to the next question. What is the importance of e-way bill if we are uploading e-invoice data on portal?
Yeah, see, this question is something many people have question about why the e-way bill is required at this point in time. Currently, we are having two systems in place, one which is NIC is running e-invoice and e-way bill at the same time. Maybe government's vision is such a way that once the e-invoicing is in full-fledged, they will do away with the e-way bill. However, kindly note, e-way bill requirement is still there for delivery challans. Okay, so therefore you can't do away with those delivery challans or credit note or debit note transactions. Kindly also note, for debit notes, there will not be a movement, because the movement would have already taken place. So still an e-way bill has to be there. So there is still a legal gap between a e-invoice and e-way bill, which that bridge is still has to be there. So this system has to run parallelly along with this system. So if it is only for invoice, then there is only one solution which you can go ahead. That is where e-invoicing is taking in within its ambit e-way bill also. But there are other transactions like debit note in invoicing or delivery chall in e-way bill. So those details has to coexist unless the GST law is revised and framed in a different manner. So as long as the law is not changed and this is the position of the law, both the systems has to coexist. Except for the e-invoicing, which will be now maybe government is envisaging to do away when they go ahead with only for invoice portion of it, not for the debit note rate. Maybe we have to wait. At this point in time, both has to coexist.
Okay. All right. Next question. Is it possible to raise back dated invoice dated 31/1/2021 on the 15th of February 2021?
Yeah, so yeah, that's what. See, what will happen for services, there is a time limit. After 1 month, you will understand that I should have raised it on 31st, maybe or 1.5 months, or maybe by 15th or 20th of February. Question is, how is your ERP supporting one? If your ERP has the functionality to raise a invoice. At the same time, why was there is a delay? Kindly note, e-invoice also captures the date of generation of e-invoice. Apart from the date of invoice, it will get captured. Therefore, this time lag should be answerable to the government. Why there was a delay? So as long as you have a justifiable reason, there should not be a problem. However, we have to ensure that the invoices which has to cut on that time of supply and when to raise an invoice, if you understood it properly, there should not be a problem. And if it is in compliance with those provisions, there should not be a problem in raising it.
Okay. All right. So I'd like to take one question from Mr. Manish. So is there any time limit for generating e-invoice and e-way bill? If we generate e-invoice today and e-way bill after 7 days, is there any compliance gap?
See, that's what. So as long as e-way bill is concerned, it's for movement. And now the question is whether that movement is on payment of tax or without payment of tax is important. Time limit, if your question is only on the time limit, as long as the invoice is raised, I presume now that you are talking about an invoice situation and e-way bill and not a delivery challan and an e-way bill. So if you're raising an invoice for various business reasons, you may hold it for some more time and then you can send the goods. Technically, there should not be a problem. Legally also, there should not be a problem unless you are hit by this 96 rule 96A for export, etc. If it is for export, otherwise within domestically, there should not be the reason for delay, if the time limit is reasonable and also the reason for delay in raising or moving the goods is justifiable, there should not be a problem.
Okay. We have one more question from Mr. Manish. In case of goods returned by the buyer, how to generate e-invoice in this situation, considering A, said requirement is at supplier end, and B is supplier issue credit note at a later date or not known, but buyer sends the goods via debit note. So if you would like, I can repeat this again and we can take it part by part. So in case of goods returned by buyer, how to generate e-invoice in this situation, considering said requirement is at supplier end?
Yeah, so as long as this portion of the question is concerned, now the question is clear. It was a supply, which means a tax invoice is always there in the first place. Question is, there is a buyer who is rejecting the goods or is sending the goods back for various reasons. Either it may be rejection or it may be deficit. Now the question is, e-invoice can be done only by the supplier. It's not by the recipient. Therefore, the first compliance is always on the supplier. He has to raise an invoice. The question now is, if you're looking at the movement of goods can be done by anyone, either by the buyer or the supplier. If buyer wants to send it, let him send it through his delivery challan. Let him send it through delivery challan. And with the e-way bill, let him send it out so that goods will come. At the same time, an e-invoice, which is e-credit note, has to be generated by supplier. So the time should not be too much of a delay. It should be at or about the same time.
Okay. Now we'll take up the second part of the same question. Now again, how to generate e-invoice in this situation, considering supplier issues credit note at a later date or not known?
Yeah. So the later date should not be too highly unreasonable. And kindly note, if there is a credit note which he has to issue, the time limit will get expired and he can't take the tax adjustment also. And in this kind of a scenario, if the supplier wants to take the tax adjustment, he has to raise it ASAP and he should do it in the month in which at least the goods have come back. So there should not be a more than tax period delay. Otherwise, it will unnecessarily warrant a situation where the tax adjustment will be questioned on the supplier's end, not from the buyer's end, because buyer's end he would have reversed the credit is the assumption, since he is accepting the credit note. So the delay in credit note, if you are working around a business solution, the delay in credit note should not be highly unreasonable. Just because to ensure that buyer has taken the credit and he enjoyed the credit for some month and then the credit note is due. Kindly note, today a notification came which enabled a penal provisions, which is effective from January. Now it talks not only about the tax, any benefit arising. So if there is an unreasonable delay in raising a credit note, which means that the buyer has enjoyed the credit unreasonably. So those things unnecessarily will get into a penal complication. So kindly ensure that within a tax period compliance is met.
All right. So there's one more question from Manish sir again. Can we expect any space from GSTN or IRP from 1st Jan 2021 regarding generation of e-invoice, like 15 days, any as such?
No, so that's I'm not be a competent person. It's better to ask GSTN and NIC. I'm not sure.
Okay. So another question: how does e-invoice avoid tax evasion?
So it is more of an academic now. So it's better we understand the global scenario. In a global scenario, the tax evasion, we have this bill trading, which is getting caught across the globe. Not only India, across the globe, they are catching it. Now, e-invoice, what it will ensure is it will give the data at the first hand, not at the delayed. At least the post-mortem of excise, which used to happen, which will get delayed now. So the moment you raise an invoice, and if the government has the data about the risky GSTIN holders, they can track them down and they can ensure that the future chain of this credit, etc., can be blocked. That is the simplest answer. Now you can see which is happening now also. Which today also they enabled various provisions, of Finance Act 2020. So these are the ways in which we can definitely tackle. One is blocking of credits, because the risky GSTINs are they already are already on the list. They will be aware by this time. The government is already aware by this time. But at the same time, blocking of e-invoice facility can be done. Maybe government, if they are envisaging, and what I'm saying is only a ifs and buts. But at the same time, you should understand that e-invoice at the time of raising it will not. But the moment there is an invoice raised, and which if it is getting routed through various means, definitely it can be tracked down. So therefore, all this can be controlled. So there are various means. It's not only one means. There are various means to. So this system is a system which can ensure that tax compliance or the data flow is captured right from the system which generated this portal. So it can. So if I'm a system auditor, I can track down the system and ensure why this data etc. went along.
All right. If there is no QR code on the invoice, how do we go about it?
So that's what. So if there is no QR code, the risk is that the credit is at stake for the buyer. Without QR code, your goods will be at stake on the road. So even if you have surpassed all those things and you have come to your godown, etc., so then still a risk of a post audit will always be there. So only point is ensure a proper compliance is met and ensure your suppliers are made well aware of this e-invoicing provision. That's the only way to comply and to go about it.
Okay. There's one question from Mr. Raman. Is IRN with QR code generated invoice required to be signed by the authorized signatory?
See, that's the point. Again, if you are transmitting those QR code generated IRN through computer means, so effectively your digital signature ideally should be affixed over and above the digital signature which has come in. So if you are complying with that provision, there is no requirement of signing once again. If you are again taking a printout of the QR code signed e-invoice again, and you are transmitting it through your e-waybill, then it is better as a suggested model to sign it. Though you can print at the end that this is a computer generated statement and not requiring signature, you can still go ahead with it without signature. But if you want to take abundant caution, you may be signing it. If you are signing it, then sentence should be taken away. Otherwise, that sentence will be sufficient. Therefore, the physical signing is not necessarily required as long as you have generated your e-invoice which you have got through printed or affixed on the invoice. And if you are sending either through electronic means or even the hard copy, at least you have a sentence to say this is generated and stored in the electronic medium. And ensure that you really store the data. The storage of data is not 1 day or 1 month, 72 months or 80 months. So as long as you comply with that, then there is no requirement of signing it again. Otherwise, as an abundant caution, if you are thinking that road, etc., where the interception are high, therefore better to have a signed invoice over and above. Maybe there can be questions. Otherwise, computer generated statement should be sufficient.
All right. There's one more question. GSTR 1. Will the computation be done through e-invoicing or not?
So presently, it's on the job now. So you can see the auto population is happening. The moment you raise an e-invoice, it will get auto populated into GSTR 1. So that auto population is happening. But still B2C, etc. are not getting reported. RCMs are not, anyway, RCM is currently not there in GSTR 1. Other data are also missing. So as of now, it's like a part work in progress. Maybe they will bring, even if at all e-invoicing is made applicable even for B2C, then everything can get streamlined. Otherwise, it will still be an open issue. So as of now, it's only a part data. Still, other data are required to be entered by the GSTR supplier who is filling the GSTR 1. So it's only a part information.
All right. So I think we will take up a few more questions for the next few minutes. Before that, I'd like to launch one last poll. So I'm launching that right now. Would you like to see more of our e-invoicing sessions with LKS and Mr. Vishwanath? Would like to know that. Once again, I'd like to thank Mr. Vishwanath for his time. It has been extremely valuable for us, and thanks a lot for your contribution, sir.
Thank you.
So I'm going to leave this open for another minute before we get into a few more questions. Also, I'd like to take this time to inform you all that we will be reaching out to you shortly in the next few days. So if there's any extra queries or any technical queries that you have, we will take that up. All right. Thank you. I'll be ending the poll now. Okay. So we can get back to a few more questions. There's one question, whether receiver of e-invoice needs to record 64-digit number in their system or record the regular e-invoice number.
This is a tricky question because it requires a lot of system changes also. It is advisable for the associates to have a track of e-invoice number as well, apart from the document what they have, because these including acknowledgement number and the date also, apart from e-invoice number. This will help them in long way, especially after 4 or 5 years when the audit starts, or 3 or 4 years after the audit starts. You may not have a physical copy of the invoice. At least the record is there. Maybe you may be able to trace it back. So therefore, your system should have those fields so that every data is captured. And though it may get look like a bulky data, but if you can convert into a metadata or whatever solution providers are providing, it is ideal to capture those. You should capture it because it will help you in your various tax compliances and also audits and other requirements.
Okay. One question from Mr. Raman. Is sign image valid as electronic invoice?
Signed image is not a digital signature. Like you can just there are various methods of copy pasting a signed data. So that's not really a signature per se. And kindly note the term. That's why when I started the session, I started with the concept of saying that it's not only a tax law you have to know. You should know the information technology law. So here, what is more important is signature in the context of information technology law, not in the context of tax laws merely. So apart from tax law, in the context of digital signature or certification, etc., the authentication, the two-way signing, all those things are critical. So mere affixing of a paste or those things may not be really a compliant manner. So therefore, it should be really a digitally signed or an electronically stored and generated data. Should be the proper compliance.
I think we can wait for another minute if at all any extra questions are coming. And if not, I think we can close the session. Once again, thank you all for your time. We will, as I'd mentioned earlier, we will be reaching out to you on any further requirements, any further queries, and we can take up a one-on-one discussion as well.
Thanks, Siddharth, and thanks to all the participants. It was a knowledge enriching session for us also, because the type of questions which came up, it always test our knowledge and also our learning curve. So with that, I like to thank Web Solutions for having this webinar, and I thank all the participants for their time. So yeah.
Thanks a lot, Mr. Vishwanath. Thanks a lot. All right, I think we can close today's session. So on that note, thanks to everyone and have a wonderful evening. Thank you all.